right, so we're back here with part two here, and it looks it was very close today in the voting, but GDX here, the gold miners ETF, squeaked out the win. So same format here. I'll do the same thing here. We'll look at it. Oh, we'll start on, well, in this case I've got a 3-day, and then we'll switch over to our Renko template and take a look there. All right, so coming out here, I had to go out to a 3-day just to get some perspective on this. So interesting, it's very similar to what we just looked at with the pound yen. Impulse down, you know, looks like the ABC is going in here. Now we've come to the 38 with the A wave, and again, looks like a nice 3. It's deep when we break the golden zone, so we lose the potential golden corner here, but we still have a corner. All right, as long as we have that corner, once we get it and we start to move away from it, as long as we hold, as long as this low holds, 80%. All right, we don't know when it gets there, but that 80% holds as long as this low holds. So just looking at that, I mean, we can kind of just here out on a 3-day. Let's go down to a daily. Yeah, sure looks like we can label this pretty clearly. It looks like we'd have to do it this way. So let's get that in there. Oh, here we'll drop this down. Micro, we're good. Okay, so there's the ABC leading into the B, and then it's, you know, again, it's just pretty straightforward here. It looks like that's a 1, 2. It looks like that's going in 3, 4, 5, seeking that. And now go target here. Now, of course, we've broken the golden zone here, so while it's there, well, it's there just as a function. It's always attached to my retrace. I wouldn't, that's not a hard target per this retrace. So, I mean, you could, we could pull it off here just so you don't get confused by it. So as we look at it here, certainly we want to wick off the 1 wave just to see if are we going to hold the impulse here from the low. All right, let's just see how we're looking in terms of distance traveled. Well, there you go. All right. And guys, you know, same thing every day. right to where you're looking for the wave 3, right? I mean, literally splits it. It's perfect, right? So you could just pull that over here as well and go, huh, okay. Ran into some selling, some supply, and you think of it that way. So that being established, we know we've got a strong contender here for the third at this degree. If we're going to hold here from the 2 to the 3 high, kind of eyeballing this pivot here. So any of this, actually, I might do it this way since I want to get all of these in here. Looks like that's pretty reasonable. And we could get this as well. So here's your support line. That would put us right at the 50. So that's the ideal scenario here where we get an algo on board. So now I do get a solid target here. If we're going to hold here, that looks like a good target there. So pulling that back out here, let's see. All right, does that look like we could be done there? Well, maybe. We'd be shallow for if this is, so again, thinking impulse down, and we're seeking the 50 here, and we have this little structure here from that prior one here. Let me put it all back together. So this would be a reasonable target. Now, we may not get there. So you've got a little bit of mixed signals here. The implication from the median lines are that we're headed towards that median line. We could draw another one here, but I certainly wouldn't take that off until one of two things happen. Either we get there or we start to break down and we're challenging that low. If we get too far outside of this, then you'd be rethinking this count. And the idea perhaps is that, oh shit, could we have, well, we could have a W, wouldn't be, we could have a WXY. And this could just be an ABC. But that would surprise me. I think if we're gonna complete this impulse here, right, so I think this is very tradable to the long side right here, right now. No reason at all not to like that. Nothing, right? I mean, you've had the retrace here. You've had you could be looking here. Now, let's pop this up a little bit. So here's the height of your Elliott oscillator. So just what you would anticipate for the 3. So 1, deep for the 2, up for the 3. We're down here. We've gone a little farther than you might like for ideal, but certainly qualifies for a 4 there. Let's go 8 hours, see how we look here. Open it up a little bit. I mean, certainly you're in the buy zone there. Now, it doesn't mean you just buy it blindly. you want to see a little bit of a bounce, right? So if this is going to go A, B, C, we want to see a little bit of a push off of it so you can get the first little retrace, or at least you've got something to work with regards to a pivot the market leaves you. I think it's like you've got a little structure here as well. So as we bump into that, I want to see a little, give me something, just a little bit of green so I know that buyers are responding here, rather than just sit here with a limit order. I mean, you know, if you're extremely aggressive, but then you're using a dollars and cents figure. You're not using the market to define where you're at. You're just saying, okay, I'm willing to risk X amount of dollars. There's some validity to that. But ideally, let's go down even 3 hours here. I can get this ABC to play a little bit better for me. So if the first move down is the A and I'm in the B and I'm seeking the C, it kind of implies that there may be lower prices still yet to come here. So let's look in there. Well, how far do we go here? Let's check it. Well, we break the 65. 707 holds it. It's a good candidate for a B. Remember, B is always a push to get to those pivots that fails. So the A, the B, I'm just looking as we possibly. So the ABC in here is pretty easy to spot. So this ABC looks good. Let's go sub micro here. Let's put this just to be consistent. Okay, so we could have this. Actually, it looks more like we might have a WXY here. So it actually is going to play better if we do it that way. So if this goes A, B, C into this here, A, B, C here, and we're going to go A, B, C. Otherwise, the count's going to break down, right? So the bullish count's going to break down. So let's think of it this way. So we could have the WX seeking the Y. So because otherwise, if this is 1, 2, and we're going 3, 4, 5, right, we're going to invalidate the idea that this is corrective, right? Because we're going to go too far. And just kind of mapping that out. So if we were thinking, okay, if this is of the C wave, 1, and this is 2, well, here's my high probability zone for my third. So you'd be thinking 1, 2, 3. Now the idea that this is a 4 blows up, and then you'd be looking at, is that really a diagonal? I don't think that looks as good. So process of elimination, if we're going to stay bullish here, if this is going to resolve bullishly, right? So as in we're going to, well, ideally you'd like to see it hold the 50. So if we get up here, so here's the 50. If this is going to be an ABC, we'd be looking for more something along the lines of 100% the length of the A projected from the B. That would put, so here, that's perfect. Now, just because it's there and it's technical doesn't mean it must stop there. The 1272 would be the second most common target, and that would still hold us in a diagonal, but it would be, the deeper we go in the 4, the less probable that you are to get up and get after those new highs, right? Then you're setting up either a failure in the 5th or a double top. But right now, that's still very viable. I love this, the confluence here of the 100 and the 50. So anywhere in this 25, what do we call it? Let's call it 2560 to 2520. You got a tight little pocket there. But same idea. I'd like to see it come down, get in there, and then show me some signs of coming out of it. Note here the low volume node at the 65, if you can see that. So you can see the little pocket here. If we draw that over, you can see why. No market acceptance. So if we're going to go further, that's where you'd anticipate it's going to go. Now we'd be down to the 1272, which is still valid for a 4. So you got to think about that. But I'd rather... excuse me, sorry guys. I'd rather get stopped out here on the small one and then reevaluate down here on the second one rather than take the drawdown. Right, I'll take the small loser, right? It's just part of trading, right? I'll take the small loser. And now if we do come down here, I want to see that hold. All right, so I want to see that. If we're going to come down here and get technical, I want to see this hold. If it's threatened, that's fine. But then I'm absolutely looking for that before I go long on it, right? So I know I can put my stop here. Then okay, maybe I'm going. But right here, why take that drawdown? There's no need to. You're trading for the precision here. So you're looking for that. Well, remember that you had structure here. That was the B high. So this pivot here, I want to see that hold. I want it to come down there because then you're right in the kill zone. You're right where that you've got about a 50-cent range there. Not even that. Well, maybe 50, 60 cents. You got a nice tight range there. I don't want to give that a lot of room. I mean, unless you're looking for a good opportunity to get in and you're a holder. If you're trading this, oh shit, where's your 23? That's enough. Again, this is just me personally, right? You could do it either way, right? If you're an uber bull, a lot of people are very bullish gold right now. If you're an uber bull, I mean, at some point, you say, okay, where's my stop? Is it the pivot here? Well, let's do the P&L on it. For a buyer here, reasonable target to get the fifth in. If you're going to go under the one low, well, there's 4 to 1. It's not a deal breaker, right? I'd rather keep it tighter here. Then I got 14 to 1. Now, if I get stopped out and I'm coming down here and I'm entering lower, right? Then I'm going to be looking. Well, I certainly would want to stay above the 1 pivot, because we're the implication is here, and this looks more like an impulse in that 3. And remember, we went right to the 1618, 175 window. So we're playing this as an impulse. So you got a secondary set of median lines here that could come into play. So one more thing to kind of tee up that zone. But if we were to break down here and go towards I know that's hard to see. Here, shit. Let me get this out of here. Okay. Let's get all of this out so you can see a little bit better and open that up. I've got a lot of. Bear with me a sec here. Let's get some of that out of there. Okay, so let's get these, and those, that out of there. Okay, so there you go. And this one, I'm gonna, let's get you right on that low. Okay, this one I'm gonna hide. Where are you? Is it that one? No, that's the recent. There we go. Okay, I'm gonna hide that one. All right, so now you're looking at it here. So yeah, we're beyond here. So likely the 2 would cover this. So if we're gonna come down here to this edge right here of the median line, I don't want to give that a whole lot of room, right? So then I'm looking here. So let's get this put back together. There's my target up here. Now look at that. All right, so now I'm looking at 10 to 1. Yes, I took the small loser here, but for me personally, I'd rather take the small little one than reevaluate down here. Like I said, you could do it either way, right? So here, stop down here, target here. There's 3.5 to 1. That's not horrible. Just personal preference here, and how aggressively long you want to be here, and whether you're more just kind of investing here, or you're trying to trade these with tight stops and good precision. And really, I don't know that there's a right or a wrong answer here. It's just what your time horizon is on the trade. You can do either one. That's how I would do it. And then kind of keep this one in mind here. You've got plenty of structure if this comes down here. There's all sorts of pivots here that should offer some support. I mean, shit, I'd wick them all off. Lots of them, right? That one as well. All of these, all potential support. So you can see we've just come down and we've run into the first one. Now, that doesn't mean we can't get through, of course, obviously. But all of this should be some structural support. So the buyers that are there are likely to start defending. Reasonable places. All right, guys, there you go. Now, so before I go on that, let's go look at it over here. I'm just force a habit. I'm about to wrap up. So here it is with our Renko template. So if we're looking now, we've had the sell side cross. So this is kind of a decision. This is a good example. All right, so here we 65, we hold. Now you see the break. So that was the 707 there. So we've broken there as well. So from an Elliott perspective, you're still thinking, well, okay, some sort of 1, 2 going in. Am I going up for the 3, or is it A, B, C? One or the other. Again, they all look the same. So if we're thinking about, so here's where the Elliott count can be influencing your thinking. So we go back to the daily here, and we're thinking A, B, C. We're seeking the C up here, right? Sorry guys, we're seeking the C up in this range. So if this is now, if we're coming back here, we're thinking, oh, it's corrective. It's A, it's a B, and we're going up for the C. That can influence your thinking. All right, so let's come back over here. and just look at it purely from the trading perspective. So if you're looking at this, just a quick evaluation, we've had the MACD cross, so MACD's negative. Do we have the qualifications here? Yeah, let's see, let's get all this put back in. So 1, 2, 3, 4, 5, let's get that degree down here. So you've got all of this still sitting, and there's the wave one high, just as we did, right, with traditional candles. So as we're coming down here, you've got, actually let's zoom in here, you've got the conditions there for the sell. So if you're, just kind of taking this, well, short side, long side, don't have any preference, or you don't have any bias one direction or the other, you just want to trade it. You do have this bar here is giving you the condition. Well, the bar's not closed yet, but you're getting the conditions here. Well, you don't quite have the 8 crossing the 13 just yet, but this would be a setup bar. So you're kind of waiting here. I don't see if you guys can see that. All right, so do you see here? So here's the 13. The 8 has not closed yet. So we're falling below. The MACD is negative, but we don't have the conditions here in the smaller filter. So you're waiting for this. Well, in actual fact, you're waiting for the 8 to cross the 13 close. So as that comes down here, if this is going to go a little bit deeper, now do you want to be a seller? So the alternate is that we come down here. we don't get the 8 crossing over the 13 because we could go a little further before that crosses, and then we get, so as we come down, price could come down here. It can't go too much farther before that's going to cross, and then you go back up without ever having the cross, and you'd be anticipating that the MACD will cross over positive again. But right now, the next trade likely setting up here, if this is going to continue to fall lower and lower, and we're going to get that deeper retracement. All right, so here's the whole thing put back together. If this were going to come down here and go further, it's going to give you, you've already had the go ahead here on the sell on the MACD. You don't have a fractal until all the way back here. So the distance to the stop, well, let's go down to the 8, see how that looks. So now you do have a fractal up here on the 8 hour. So down here, so 1, 2, 3, 4, we're coming down. Still hasn't closed even on the 8. We haven't, or part I should say, we haven't crossed. All right, so the contender is right there. Now also note here you've got the Vegas wave sitting right here at the 4, right here, at least here on the 8 hour. So my bias here is looking for the long side. I'd put a channel on this as well, something along those lines. So if we're going to come down here and pause and pivot, so same thing, guys, right? All the same structure is there. All of those, nothing changes just because you're looking at a Renko bar. It's just you lose there's no time consideration. It's just pure price action. So if we're going to come down here and hit that, you've got the potential, just a perfect setup here where you won't see the 8 cross the 13. You'll come down here, pivot, then you'll get the secondary cross here where you'll cross back above. So you'll see the MACD go positive. And you'd like to see some buying come in, just as we saw here, whether you're using the Weiss wave or the OBV, either one to give you that indication, okay, buyers are coming into the market and taking control as they enter, as they did right here, right? So we see that clearly, right? MACD crossed here. There you go. So it's one to be watching, but it's not ripe just yet. But just so what I would do, I just put an alert on this line. All right, we tag that. I want to know about it. I'd be looking on the long side, and that would give us the ABC here, or pardon me, the 5th potentially now of our C wave up here. All right, there you go. Okay, guys, just another. It's a simpler way to look at the market. You can make it as simple or as complex as you want. This is just another alternate here where you can kind of take advantage of both. The analysis here to get your bigger picture and your wave count, and then use some of this for entry and exit management. Guys, all right, there you go. Okay, talk to you later.